Hey, howdy traders. This is a quick intraday video. I haven't done a video for quite some time. I'm sorry, I've been working a lot and really took some time off to refocus things and stuff like that. So, some things I got going on here. I got different fib levels on here. One of the really important ones that, if we're starting into a new bearish trend that I look for is how uh, the price action is interacting with the monthly or the weekly market maker expected move. So if you come over here, market maker move, hit that. You gotta go in the daily time frame. Okay, and I'll zoom in here real quick. Okay, guys, and so what we got going on here is right here at the 100% on my fib right there. That is last week's close on the Qs. Okay, and right down here the green line, that is this week's expected move low on the Qs. So this represents the range, the expected range the Qs would be having this week, based on the option markets as of last Friday. What I did, I drew fibs between those two ranges. Okay, guys. Okay, and so basically, if you're wanting to see a big change in market character, what you're wanting to see is whenever you get relief rallies in the market, like we're currently got going on here, we want to see a major resistance and rejection of ideally the 50% mark of the expected move. So we're wanting to see a lot of resistance and a rejection of this 50% retrace. So basically, if we're entering into a new trend lower, we're 50% recovery of that bearish side of the expected move. This is what you would generally look for, like a we had a wave one down, possibly a wave two up. If you use Elliott wave, a relief rally into that 50% area, that you know very rapidly gets rejected for a bigger wave three lower. Okay, that's a theory in the back of your mind what you're looking for if there were truly starting a bigger wave correction in the market. Okay, right now what we got going on here on the price action, what we've been having all afternoon here, we're right into that 50% retrace, and we're having trouble getting through. Okay. I don't know what's going to happen. I don't know if this would ultimately become, a you know, they're just suckering everybody in to this to start the bearish trend or not. I mean, the odds are probably 60-40 that the bulls will regain the momentum to the upside. So that's what you got to think in your mind. The bigger trend is bullish. We've had a big 4-day crash in the markets. The odds are probably in the favor for the bulls. Be very mindful of that. But we're right here. This is not the area you want to be adding um, calls per se until the market proves that it's going to start accepting prices above that 50%. To me, what we got going on right here, right now, okay, this to me is currently telling me there is a lot of puts still trying to drive this price lower because we're rejecting right where we should reject based off the 50%. Okay, guys. So we're rejecting. So this to me, uh, there's still an edge currently for the Qs for the bears, given the current price action. Okay, guys. So just be very mindful of that in the back of your mind. Just one of those little tricks that I look for. Okay. Another set of fibs that I've got on my currently have on my charts is this here was a trading cycle right here. So just be very mindful of that. We have a currently a trading cycle right there, and I lined up my fibs accordingly with that, and that's how I got those secondary fibs on my chart to see how that fib's hitting there, that fib's hitting there, and this gives you some idea how this trading cycle is going on, currently trading on. That's how I came up with that one. Okay, similar situation. See how the trading cycle is lining up here on the SPY. I drew them exactly the same, and how we came right down to that 100%, putting a higher low in at that 100%. based off the, how the price action is interacting here, okay, and how we bounce right there, okay. So be very mindful of it, right, real close to there, okay. Now, similar situation, I did the exact same thing. I'm not going to go back to the daily time frame on the SPY, but I drew it exactly the same on SPY like I did the NASDAQ, okay. And so we're looking at this was up here was Friday's close. This down here was the expected move for the week. Okay, guys. You see how on SPY, it's even having trouble getting into that 50% area. Okay, guys. So SPY is even acting weaker than the NASDAQ. Okay. So ideally, what you're looking for, if you're really bearish the market, in my opinion, knowing the weighting of the NASDAQ, you know, I would have personally liked to seen the fibs. Uh, this chart right here, how it's rejecting the 38.2, I would have preferred to see the Qs rejecting here versus the SPY. Okay, because the SPY, I know it's reject SPY is acting weaker than the Qs, so we're actually seeing a little bit based off of what the predictive models were coming into this week. We're seeing some more relative weakness of SPY versus the Qs, so that gives me just a little bit more edge to risk on, in my opinion, back of my mind. Okay, guys, so just be very mindful of that going forward here. Okay, my final one I'm going to talk about right here, the cycle here that I've got drawn out for the Russell is right here. This is my primary cycle that we got going on here. So we broke down from this cycle here, okay, and we're currently, so this is showing a lot more relative weakness here on the Russell, okay. Uh, so just keep that in mind. We came into a major support area right here. The 230 is a major support area. There's a lot of gamma exposure here at the, so bouncing right here off of 230, that was a really good idea. If anybody, I made my money trading IWM calls this morning, and I'm glad I got out when I did, because by going into 1230, they would have wiped me out plus. But this was a it's been showing relative strength for the most part all morning. And anybody who uses the regression line on your charts, it was crossing early on this morning, crossing above the regression line, and we weren't crossing back below it. So, if you zoom right in here, 9:30ish, we were above the regression line. We were trying to hold above the regression line all morning. Okay, guys, we had a few dips, but we were still into this buy range. So we never even crossed outside of our buy range, accumulation range. So this was actually showing a lot of relative strength this morning. So this was a really nice trader setup this morning. Okay, guys. As far as okay, I got to change my this is a little bit different. I got 1 second here. So similar situation here. I had tried a couple different things here. Actually, I can erase that one. Come think about it. Remove Fibonacci. There you go. I cleaned it up a little bit. Okay, guys. Um, so this is our expected move for the week here on our fibs. This was the open for the week. This is our expected move low for the week. Okay, guys. So if you're in a risk-on market, you want to see the Russell and the Nasdaq, or a risk-off market, you want to see Russell and Nasdaq underperforming. Where the expected move for the week on week was expected to be. And what we have today is complete opposite. We're seeing actually an outperform in the Russell versus the Nasdaq even. So be very mindful of that going forward here in relation to where we closed last Friday. We are doing an outperform. Okay. So just be very mindful of that. And what we're doing here, we're oscillating between the 60% and the 38%, building a higher base for the Russell, possibly for a continuation move later today or into tomorrow. So be very mindful of that going forward here. But my main takeaway is that we are still hovering right around that 50%. So all bets are off going into tomorrow. This could very well be a potential wave 2 setting up for a massive wave 3 down tomorrow. Remember, NVIDIA is reporting tomorrow. we could be setting up for a massive wave 3 lower tomorrow. So be very mindful of that. This is where this could be either a relief rally for a wave 2 to continue the trend down, or we're putting in a higher base to go higher. Okay, so just be very mindful. Even the best thing here is not giving us an all clear that it's time to be going uh, 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 strong in the call market. Okay, guys, so be very mindful of that. Okay, thanks a lot for listening, and please leave comments below if you get a chance, and like my video, and retweet me on Twitter if you get a chance. Got me 9662C. Thanks.